Before Bitcoin goes up, the money has already moved. The real problem is this, that money is not coming from Korea. Right now, experts are deeply divided. One side insists the historic bull market hasn't even begun. The other ones, the 4-year cycle is over. It's time to prepare for a bear market. But we are asking the wrong question. Instead of asking where is the price going, we should be asking where is the money going right now. If you want to understand the crypto market heading into 2026, you must stop staring at chart and start reading global liquidity waves. So where does this money come from? Through what channels does it move? And why has Bitcoin always been the first asset to react? Once you understanding this flow, the market looks completely different. What once looked like an ending may suddenly look like a beginning. In today's video, we'll break down step by step how Korean crypto investors must learn to read global liquidity waves in order to survive and thrive the next cycle. Many Korean investors think like this. Shouldn't Korean interest rate, Korean inflation, and Korean empty matters the most? They do matter, but not for crypto price. Why? Because crypto is a global asset. Korean retail investors account for large trading volume, but the money that actually moves price does not originate in Korea. Crypto prices are not decided by local conditions. They are driven by global capital flows. Crypto prices are naturally driven by retail buying, selling, or short-term news. If you trace the source of real market moving capital, it almost always leads to four institutions: the US Federal Reserve, the European Central Bank, the People's Bank of China, the Bank of Japan. These four central banks are the primary issuers of the world's major currencies: dollars, euros, yuan, and yen. They are the gatekeepers of global liquidity. And here is the critical pattern. Whenever these central banks simultaneously or sequentially begin easing monetary policy or expanding fiscal support, Bitcoin always responded almost without exception. At first, nothing seemed to happen. News remained negative, prices stayed flat, but as the liquidity slowly slips into the financial system, Bitcoin is always the first asset to react. This means Bitcoin's rallies are not hypes or coincidence. They are delayed reflection of global policy shift. That's why, to understand crypto, you must watch what these four players are doing before you look at the chart. Liquidity never floods the market all at once. It moves in waves, and those waves follow a clear sequence. Stage 1. Policy shift. Central banks cut rate, government expand fiscal spending, bond issuance increases. At this stage, asset price barely move, the news changes, but charts stay quiet. Stage 2. Internal financial adjustment. Bank balance should improve, stablecoin supply begins to rise, short-term funding stress eases. This is when smart money starts moving quietly. Most investors feel nothing yet. Stage 3. Asset price reaction. Only now the prices begin to move. First Bitcoin, then Ethereum, finally altcoins. This is the moment retail investors say something is finally happening. But here is the key insight. What most investors perceive as the beginning is actually the final stage of the liquidity wave. You do not need to track every economic indicator. In fact, the more data you watch, the worse your judgment becomes. For Korean crypto investors, just 3 indicators are enough. 1. Global empty growth rate. Focus not on Korea, but on the US, China, and Japan. What matters is direction, not absolute size. When global empty stops falling and turns upward, the market has already entered its preparation phase. 2. Stablecoin market capitalization. The combined size of USDT and USDC represent deployable capital waiting on the sidelines. Stablecoin supply always expands before price rise. It is the money preparing to move. 3. Bitcoin dominance. If Bitcoin dominance is rise, the market is still in its early stage. Capital is consolidating into the safest crypto asset. When dominance flattens or starts to fall, money is rotating outward, first to Ethereum, then the altcoin. That is why the so-called alt season only begins after Bitcoin dominance peaks. Now comes the most important question. How should we act? Liquidity cycle always follow the same pattern, but most investors fail to translate them into behavior. Early phase. News is negative, price moves sideways, sentiment is cynical. This is the best preparation period for research, portfolio structuring, and cautious accumulation. Mid-phase, Bitcoin begins rising visibly. ETF inflows and institutional headlines increases. This is not the time for blind chasing. It is the time for rebalancing, not FOMO. Later phase, altcoins surge, leverages explode, everyone is winning. This is the most dangerous phase. The most losses always occur when everyone is convinced. Ask yourself these 4 questions calmly. As global M2 increases, is stablecoin supply expanding? Where is Bitcoin dominance? Are policymakers signaling the end of tightening? If 3 or more answers are yes, the market has already chosen its direction. Before Bitcoin rises, money always moves first. Then money doesn't show up in headlines. It doesn't appear immediately on chart. It moves quietly through policy and liquidity across the borders. Today wasn't about predicting prices. It was about understanding the sequence of money. The 2026 crypto market will not begin suddenly. It has already begun. You just don't feel it yet. The real question is not what is the price right now. It is where is the money right now. Those who chase charts are always late. Only those who read waves can prepare. The money has already moved. The only question left is, are you standing on the wave or watching it pass by?